Good morning. Excuse me. I'm Vince Lancey, and in today's market rundown, we're going to discuss two stories. One is a CNBC story that discusses gold going to $3,000 as quoting Citibank. The second story is about a recent trip by a JP Morgan head of precious metals trading to the China Shanghai Gold Exchange. That's their physical exchange. So let's get to that. First, we'll start with the prices. The dollar is up 2 at 106.20, remains strong, getting stronger. 10-year bonds destroyed the last couple days and weaker again today, yielding 464. The S&P 500, 5071, 5150 was apparently not that important of a number yesterday. Up 14 handles today, but it was lower yesterday. The VIX is trading 18.8, down 38 basis points today, but significantly higher over the last 3 days. Gold is down $9.50 at 93.72, being bought. It's acting like a beach ball now. There's buying that keeps coming in and taking the dips out rather aggressively. Silver, 28.28, down 55 cents. That seems like a big move, and certainly it is in dollar terms, but given recent volatility, that's actually just a pullback. Copper is down 6 cents at 4.29, so it's 1.4%. WTI is down 56 cents at 85.40. I believe Saudi Arabians have been pumping oil when the Israel-Iran problem escalated, meaning they're not totally our enemies yet. Natural gas, 165, so it broke 170. Maybe we have some downside there. I can't really say. Bitcoin, 694, down 694, I should say, down 1% at 62,720. It's really in a trading range between 60 and 65,000 now. It's near the top quadrant. Ethereum, 3068, down 32 points. Palladium down $17 at 1018. Platinum, 966, up $4. That pair is trading against each other now. Grains are mixed. Soybean is unchanged to up. Everything else is down. So wheat continues to lead the complex lower, and soybean bucks the trend today. Okay. The first story is a story by CNBC quoting Citibank saying gold is shining bright like a diamond and it could hit 3,000, says Citi. Now, we have that story as well. Gold prices continue to rally as Middle East tensions spur demand, lifted by the bullion's safe haven appeal. Gold prices notched another record close Monday with the most active June contract for gold futures settling at $23.83 an ounce. Now, I have some notes here. On February 14th of this year, we shared with premium subscribers the Citibank report that discussed this. On February 20th, we did a full write-up on this report and some proprietary analysis describing what it implied versus what it really meant of that research report. That's also included here. On April 16th, that's today, CNBC is sharing their insight with readers. We have reattached that original post and the actual report that all this news is based on with our breakdown in this report. We're not going to comment on any more of this except to say the mainstream media runs a story when it gets clicks. Now, they touched on this before, but not like this. So that tells us that this is getting traction if you would do a Google search term. This story is not new. It is significant, but it is not new. We have it all here for you. Next story. This is new. We break stories. We don't lag stories. JP Morgan Chase Bank visits Shanghai Gold Exchange. In November, Goldfix broke a story that a New York bank had taken delivery of COMEX gold and sold it in China to close the widening Shanghai COMEX ARB differential. Since then, many tons of gold it should be metric tons of gold have left U.S. shores for China. Since then, still almost none have discussed it. But now it is becoming obvious who at least one of those banks was. I would ask you rhetorically, why would your head of trading, which is what we're about to find out, visit the Shanghai Gold Exchange, a physical exchange, not futures, not derivatives, unless he was buying or selling physical gold on that exchange? Further, given the price in China is higher than the price in the US, and he's a banker, so he wants to make money, he's not buying China gold for US delivery. Okay? So here we go. I'm going to read this story as sourced from the Shanghai Gold Exchange. What I'm saying is JP Morgan is selling COMEX gold to China. That's what I'm saying. It's my opinion. Do I have proof? We're not going to go to court. Do I have enough information to trade on it? Yes. And subscribers have known about this since November. Anyway, and it continues today. On March 27th, 2024, Scott Willig, Managing Director of Global Precious Metals Trading at JP Morgan Chase Bank, and his delegation visited the Shanghai Gold Exchange and held talks with Chairman Yu Wenjian. The two sides engaged in an in-depth discussion on how to deepen cooperation and jointly promote the high-quality development of China's precious metals market. Now, I'm going to read all this. There's a part of your brain, if you're a gold person, going, wait a minute. The company that was just convicted of gold manipulation is sending their gold trader to China to negotiate? It's kind of incredulous, isn't it? Well, without being cynical, I'm going to say, no, it's not. See, they cleaned house last year. All those people were found guilty. They have new blood running the exchange now. Now, he's not going there to discuss doing business. They're already doing business, and they have been. This is a formality. Hey, I'd like to meet the guy who's buying all the gold. It's good business. So, this is the way the world works. The good news is JP Morgan's not bearish on gold. They're bullish on making money. And who's the biggest player in the world now? China. And JP Morgan wants to make money. What does China want to do? It wants gold to go up. Gold's going to go up because JP Morgan's going to help them achieve their goal. Okay, continuing on. Chairman Yu Wenjian introduced the recent development and future plans of the Shanghai Gold Exchange and expressed gratitude for the long-term active participation and strong support of JP Morgan Chase Bank. Long-term active participation. He emphasized that the Shanghai Gold Exchange will always adhere to the development direction of marketization, rule of law, and internationalization. He's talking about their currency. China's coming out. Now, they're not coming out at the rate that everyone will be happy about, but no one's going to be happy. Everyone's not going to be happy is what I mean. Anyway, he looks forward to maintaining a good cooperative relationship with both parties in the future, jointly promoting the healthy development of the precious metals market in China and globally. Another side note, this is an advertisement to the BRICS. Forget about the relationship between China government and U.S. government. China business and U.S. business is getting along fine. We got it under control. Okay? Scott Willig stated that JP Morgan Chase Bank attaches great importance to China's precious metals market and has a long-term commitment to continue deep participation. In the future, it will actively leverage its own advantages, strengthen comprehensive cooperation with the SGE, and contribute to further promoting the exchange and cooperation of the precious metals market, both domestically and internationally. And then I wrote, where nations fail to do business, banks step into the breach. Another note for you trading wonks. All the bullion banks now have raised their price targets in gold. The one that raised it first, JP Morgan. And that's because they have the inside track on what's going on. The ones that raised it last may be, I'm just saying, maybe the ones that are a little bit short. Okay, moving on to price action. I just wrote some notes there. Behaviorally, gold is beach ball time. Silver is leading the pack. Miners, I have no clue. Oil is touch and go. Touch and go because as bullish as it's been, I know Saudi Arabia has been leaning on oil, throwing some oil into there during the Israeli-Iran escalation over the weekend. Bitcoin and Ethereum looks weak, but not sickly. That's an opinion. I don't have any information on that. Stocks, there is a problem now. There is a problem with my spelling now. But yes, there is a problem now. Because you had Goldman Sachs report great earnings because of trading. They're making money trading now. And the stock market still took a dive. The stock market chose to focus on Tesla laying off, which means other companies are going to lay off, maybe not like Tesla, but they're going to lay off. And so the economy, the markets are looking very stagflationary. Gold up, stocks down, dollar up, bonds down. You can't have that without stagflation. Okay, going to the bottom. Today's data. Housing starts at 1:50. Housing starts are today. Fed Chair Powell speaks at 1:15 p.m. That's probably significant. I don't know what they're looking for, but they're looking for something. Premium, Citi's report calling for 3,000 gold. We've reattached that. Plus, we have the full gold fix breakdown and analysis of that report if you'd like to go to the source of where the news is coming from and make your own decisions. Checking back with the markets. Actually, let's throw the gold chart up there, right? Little chart porn. So here we go. Here's Thursday, Friday, slam, right? Reopen, stronger, right? We'll say you could call that a reaction to the war. I just say it's buying, getting us back into a normal range. And then you have a nice big fat dip here that's bought in the same hour. This is an algo buying. This is another, I wouldn't call this a slam, but it could be. This is probably some longs getting out. And here we are. Here we are basically this is where yesterday's rally started. So here we are 2 days ago. Okay. This market is being managed, folks. That's it. I'm Vince. Have a great day. See you on the other side.